Trey. It's Trey. He made it.
Nice, nice. All right, we're ready to go.
Yes, sir. Yes, sir.
Right here.
Right here.
All right, guys. Welcome. We're going to we are going to learn some really cool stuff. You guys are gonna like it. This is one of mine and Les's favorite stuff.
Patterns. Patterns.
This
Patterns.
site looks different. What's the site that I first found? Do you remember?
No.
Let's see. Oh, fuck it. All right, guys. So we're gonna learn a couple different patterns today. Um, hey Trey, you see RSR right there? Oh man.
Yeah, man, I found out how to view it. I don't know what I was doing there. But yeah, I see that.
I knew it, man. RSR every single time. I when I start getting messages saying, because I have a couple people about RSR because I told them to. They're like, "Hey, man, like everything's popping off and RSR is not moving. Like, what's going on?" You know, I'm like, "Oh, that's my signal." I'm like, "Okay, it's about to pop off." So
Accumulation. That's what that is.
that's one of my biggest bags besides 1 inch in Ethereum. So I'm really really happy. Okay. Let's start with BTC right now. So obviously you guys have been seeing there's patterns inside of patterns, right? We see a W right there, came back up, came back down, tested this neckline, right? So right about there. Yeah, I went a little bit lower, but look, there's actually a couple patterns in here. The first one, I see a double bottom right away, right? And then if you zoom in, you see that the W play out, right? Comes back down here, gets rejected at the same level that we're getting rejected at right now, about 38.5. You come back down, look, what do you guys see here? Little bullhead, right? Little inverse head and shoulders, little longhorn action, Texas Longhorns, look. Boom, reversal pattern. That's basically what this is. So what I'm really teaching you guys how to trade is the easiest thing to really look for is in my opinion, it's looking for reversals. So you're looking for momentum swings, momentum shifts. So I mean a lot of people call it momentum trading. That's what you guys are looking for. You guys are looking for a shift of momentum because you can take advantage of these, right? So you want to buy here, right? And a lot of people who took my Doge trade the other day bought here. And it was kind of going, it's kind of going. Some people were freaking out, then boom, 60% gains in 1 day. So you know, also a bull market, so I don't want to take too much credit. But guys, when you buy right here, you're literally buying with the whales. Like this is where the smart people buy, right here. All this right here, even down here. All right here, right here, right here. And then a lot of the people who aren't prepared, which isn't you guys, because I know you guys are prepared, they're buying up this. They're buying this up. Why? Why buy this up when you could have just seen this coming and buy right here, right? And like a lot of times the best times to buy are from like 6 p.m. Pacific time to like 9 p.m. Pacific time, US time, so LA time. So a couple hours ago up until about right now is usually the best time to buy. As you guys can see, again, a couple hours ago, it was on here on support. I posted a message in the group saying, "Hey, it's on support. This is perfect entry." Look, and what happened? It's gonna come back up. It's gonna touch. It might come down and touch here again. We'll see. We need some more volume. It's kind of playing out perfectly because again, we don't want price to pump too much before a major market open, a session open, we call it. Because I mean, I always make the joke Asia likes to sell off, but guys, if we pumped right now, right, and Europe woke up in a couple hours and they see price all the way up here near the all-time high, you think they're just going to keep pumping it? No, they're going to take profits. you know, it is what it is. It's just cycles. So we see this pattern right here, right? We've already played out 2 patterns. So this is a bullish pattern as well. It's a bull flag. Let me look at this. Let me try to find this bull flag for you guys. I gotta find the old site. This one's a little, this one's a little, this one's a little more confusing to look through, but once I find it, we will flag, let's see. Flags. Okay. Can be any direction. Okay, so you guys can see there's flags up and there's flags down. We're seeing a lot of flags up right now. We're in a bull market, right? So let me try to find an example of a bull flag down. It's gonna be hard. We're gonna have to look quite a bit back. Wow, look at all these. Oh, they're just bull flags playing out like what we expect. Oh, right here. All right. This is an example of a bullish bear flag, or no, bullish bull flag, right? Bullish bull flag that turned. Where did the price go? What the heck? Sorry guys, where the fuck am I right now? Oh, right here. Okay. You know what? Let's do this instead. Okay. So you see this pattern right here. It's large on the bigger scheme of things. The biggest thing I see here is this inverse head and shoulders, right? I don't even need to draw it. I can already see it. Shoulder, it's a little ugly, but nonetheless, it still works. Shoulder, the main rule, general rule of thumb for these inverse head and shoulders is that the bottom of this shoulder and the left shoulder, so the left shoulder and the right shoulder, the bottoms cannot be more than like 5% from each other. Anywhere from 5 to 10%. You need them between 5 and 10%. As you guys can see, it's only a couple percent difference from the bottom, right? So about 1%. So this is valid. Say the price, the shoulder was all the way down here, and that one was up here. That's not an inverse head and shoulders. 1 second, guys. Somebody's asking to get in. Okay. So you see this bigger pattern here, right? We see this inverse head and shoulders, and what happens? It plays up. So these have a greater, these inverse head and shoulders have a greater chance of playing up than down. They got a 2 to 1 odds to break up. 2 to 1 odds of breaking upwards. And this is inverse head and shoulders. IHS, yeah, we'll do that. I don't want to type all that out. I see a smaller pattern in here though. I don't know if you guys do either. So if you were to flip this upside down, that's a bull flag, right? But this is a bear flag. This is what we call a bear flag. It's actually surprising that this played out upwards, because this bear flag, so this bear flag has a 1 to 2 odds of breaking up, hence the name bear flag. And this is all like general rule of thumb, guys. Like it's just averages. It comes from Bukowski's site. Let me see if I can show you. Break even failure rate for up down breakouts. Average rise decline 98%. Percentage of median. Let's see. Bull market results. Performance results. Man, this is a lot harder. I had another site that was so much more simple for you guys to see. That's what I want to show you. The charting site. No, I'm not trying to buy somebody else's course, that's for sure. Stock charts. Which one is it? Free pattern. Chart pattern site. Not that. Free pattern site. Oh my gosh, it just keeps leading us back here.
Maybe you try to add a candlestick in the search.
I have the site, guys. Let me see my bookmarks. I'm sorry. I'm not trying
Just
to
look
make
for
this
candlestick patterns.
chart.
No, candlestick patterns.
No, it's called like free pattern site or something like that. I'm just trying to remember. It's on the it's almost bothering me that I don't know because I feel like I do know. Okay. All right, guys. So I'm just going to continue to show you guys this myself. I will find that charting site and we'll work on that, right? So overall, this is the pattern, right? So this is you guys are basically seeing a trend here, right? There's a lot of patterns inside of patterns. And the reason why you zoom out is you could see this. Most people thought this was going to break down. Really, I remember this time. Most people thought this was going to break down. People were calling for shit. I don't know. I think it was like right around here. So most of the time this breaks down. When it breaks up, you usually have much higher gains than what you expect. So whenever think of it this way, whenever there's a bearish pattern and it breaks upwards, it is basically, it's telling you, okay, we know it was an bearish pattern, but we're going up. Usually there's higher gains than what you would previously expect, almost like parabolic gains, I guess you could call it. So if it doesn't play down and it goes up, you can tell, hey, this is a strong trend, or you can zoom out and say, oh, this is part of a bigger trend. So once this broke up and started coming here and got rejected, came back down, found support, I already knew what was going to happen. Or at least I had my idea, right? So I knew we were going to chop around. You know, you see a little W here as well. That kind of broke us past or gave us enough energy, momentum, right? It gave us enough momentum to get up here, consolidating, boom. I remember because I fell asleep about right here. I was like, okay, you know, it might come down. I fell asleep right here and I woke up to my alerts and then boom, I saw Bitcoin up past 20,000. Guys, we're at 37,000 right now. I remember, and Les will tell you too, I did not think Bitcoin was going to get past 20,000. I honestly thought it was going to come back down because everybody was saying, oh, it's going to come back down. It's going to touch 12,000, blah, 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 blah. Hell no. Look at that. No way. So this led us into this. And even if you go right here, look at it. This shoulder is literally like a mini inverse head and shoulders inside a bigger inverse head and shoulders. You guys see that? So there's patterns inside of patterns inside of patterns. And there could be bearish patterns on those smaller time frames. A lot of people will sell their entire bag for that. And then they see it go up and they're like right here. You know, and this is a good bet, but like once you see this break, then what, you know, some people are like, they'll sell down here. Most retail sells these bottoms and then they buy the top. So stop doing that, you know, stop doing that. If you miss this move, you know that if it's passed through here, or say you even you're waiting to see if it gets past here, say you fall asleep or life hits or whatever, you see a move, don't buy up here. Just know that it's probably going to stop right here. And if it breaks through, then buy right here. But know that it's going to come back down, guys. Remember, these lines are like magnets. It's really like the best way I could put it. And I think that's going to help you guys the most to understand that. These have the highest concentration of volume along the chart. Out of this entire screen right here, like 50% of the volume happened all right here. All on these lines. So, okay, cool. We can maybe refer to that too. Thank you, Les.
Yeah, actually, that's a good one.
And then as you guys can see here, I see this little inverse head and shoulders. Somebody could also see a little double bottom right here. And again, with double bottoms, it's the same thing. Like you don't want one bottom to be so much slower than the other. This one's not too bad. Well, like 1%, right? But then general rule of thumb is this. So if you got a inverse head and shoulders, right? He's gonna come back down, break up, right? You don't want these shoulders. You know, if this shoulder went all the way down here and the lowest that this shoulder went to was right here, but then this shoulder was all the way down here. I mean, maybe it could still play out, but the chances of it being valid are pretty low, you know? It's probably a different pattern. So if you guys are trying to force a pattern, that's cool. You know, it'll make sense to you, but you're probably going to lose because not other people are, you want to find the pattern that a majority of the people are looking at. So you can trade before and anticipate the move as best as you can and get in at a good spot so you don't get your stop losses hit. Because if you chase patterns and you set your stop loss like you should, because you're responsible, you're not a degenerate gambler like me, then you know, you're going to set your stop losses. But if you buy down here below major market structure, right? This is like a concrete floor. It takes a lot of sell pressure to bust through this, right? So you buy down here, you're good. You're good, man. You don't even need to set your stop loss. I mean, I'm take that with a grain of salt. Yes, you do. Don't listen to me. Yes, you do. Set your stop loss still. You would set like right here, but it never came back. You see? Never came back. And look, even with these pretty, you know, massive dips, like right here, this one sucked. I remember this one. Went from like all the way up here, 24,000 all the way down to 21,800. So about a 2,200 shift, about $2,300 in 1 hour. And 1 hour candle, we saw this much. This is what we call a ball buster, man. This is a Darth Maul fucking lightsaber. They are clearing everybody out. You know, there's gonna clear the shorts. They're gonna clear the longs. They're trying to get all these stop losses. for all the people that bought under right here. And the reason why they do that, you're like, why are they being mean? You know, because if they hit the stop losses, you would think, oh, well, those traders will just sit out. Hell no. If you get your stop loss hit and you see it's a wick like this and it comes all the way back up, you're going to buy back in. And that's why they bring price down. Think of it this way, guys. If you're not getting the say volume's low and price is falling, right? Or say like this, I'm trying to find an example like this, you know, price is going up, but it doesn't have a lot of steam. You see it, this is a reversal. This little candle right here is basically showing you like, hey, we're going to go into, at least for a short term, a downtrend, basically a rejection. It's showing you that, hey, the bulls are pushing up. Boom, the bears got them. Said, nope, not yet. Look at all this volume too. So let me see. I mean, there's so many patterns I could show you guys. Another one right here. People were charting out this bull flag. Again, guys, you're really just drawing. Like we all learned how to draw in kindergarten. It's not much different than that. You're just looking at these charts. These charts are as difficult as you make them. Don't convince yourself that, oh, you need to be, you know, an MIT grad to read these charts and to draw pretty lines on it. Like, you really don't. You just need to practice. Just practice. Go on your computer, go on your phone, and start looking for these patterns. Me and Les started here. I'm sure a lot of other people who were learning started here as well. Look, guys, like, I don't even really have to try to look anymore. I just see it before. Look, the lower bottom, about 2-3%. So this is valid. Anything more than 5%, you have to be a little wary of. Definitely more than 10%. No, you're not. You got to zoom out. If you're trying to force a pattern, again, so if you saw here and say price went all the way down here, like right here, that's not a Head and Shoulders. What is that? The Hunchback of Notre Dame? Like, you can't be forcing patterns, because then that's when you lose money. So as you guys can see, when you're charting an inverse Head and Shoulders like this, you're going to see a lot of these. You're going to see a lot. Wow, RSR is flying. I'm proud. That's my baby right there, guys. That's my baby, my boo. See the neckline right here. And what is the neckline? It's basically the line that the price stops. And this is the line that's going to give you confirmation of an uptrend or a rejection, right? And as you guys can see, it got a breakthrough. I got a breakthrough. So as you guys can see, you know that this is valid market structure, meaning you're getting confirmed by all these wicks, all these touches, and you've seen the wicks come up here and get right back down. This is all confirmation that this is major level of market structure. So you can see it broke through, right? We had good volume too. We thought, look, a little W. I bet a lot of people thought, a lot of bulls thought, look, we're breaking this thing already. And they got rejected right away. See, this is a reversal candle. This is basically telling you, it's like an offense in football getting to the 5-yard line, and you're hyped and you're like, fuck yeah, you know, we're going to get in. Then the defense stops them on the 1-yard line.
That would have been
Literally.
a scalp trade.
Yeah.
That would
So,
have been a nice one.
and I wouldn't focus on scalp trading too much, guys. You
No.
have to be really good and on your computer all day to successfully scalp trade. So, you know, you see this, you got stuffed by Ray Lewis and the Baltimore Ravens defense, literally on the 1-yard line right here. It came back up. This is what you call a bearish retest. It came back up, and, you know, we probably thought it was going to get a breakthrough again. Nope. Boom. Look at all that supply. Basically telling you that people are not ready for Bitcoin to be more than 24,000 at this point. That's basically what it's saying. remember guys, you're charting emotions on a graph. All this is just emotions. So right here, there's a psychological block, at least for us, for 24,000 plus Bitcoin. You know, we got up a little here, but it was very short-lived. These are only hour candles. So you came down here through here, you got this other inverse head and shoulders, right? And you could even maybe see the head right here, the shoulders. Yeah, a little bit. I'd just say that this is probably more of a V shape. They don't have to be perfect, but nonetheless, you guys are seeing patterns inside of patterns, right? Then look, we break market structure, right? And what's funny is, didn't we draw this line way before? Yep. We drew this line way before any of this happened. We drew this line as soon as we started seeing touches right here. Like say you guys saw the touches right there, automatically, as soon as those 4 candles happen, I would have drew a line right here. Why? Because I knew that that's where it was. And as you guys can see, the past determines the future on this chart, or helps you at least. Boom. Confirm. Literally, that's what, like almost 8, 10, 11. You come back down. This confirms support from before. This used to be the top. This was the top. It came up and then boom, we tested it. And people got really fucked here. I remember this one. This was what day was this? December 21st. Yeah, we had a couple days before Christmas. We definitely had a lot of volatility. I think that whole week, I remember it was pretty much a red week. I got wrecked in alts. I knew what was coming. I had a feeling that Bitcoin's going to do this, but I stayed greedy. I stayed in my altcoins and I got wrecked, right? And a move like this, guys, just let's get off topic a little bit. It's not much. It's like on the grand scheme of things, 9%, but a 9% down move for Bitcoin in such a short time, guys, alts were bleeding like at least 20 to 25%. I can almost guarantee it. So as you guys can see, this is playing out. How is this considered a breakout? Again, going to the basics. You see this candle, it's respecting it. Boom, we get a breakout. Yeah, it's a big green candle, but it doesn't matter how big this green candle is. It's got to be backed up. So imagine all this candle is somebody who talks a lot of shit, right? So this candle broke through, but it's a shit talker. He just talks a big game. He, she breaks market structure and basically goes to the next level of the parking garage. So this candle right here, if you weren't looking at the volume right here, it could deceive you. But you see the volume, so you see this shit talker actually backs up what he's saying. So you take him serious, you respect it, right? You confirm, okay, we're here. This was the high, almost to 25,000, and it came right back down. Supply, right? People weren't ready for $25,000 Bitcoin yet, so they sold to where they thought it was worth. And price only falls to the point that people are like, you know what, Bitcoin's worth this. This is Bitcoin. It's on sale. It's worth more. So that's why you're seeing this price go up. As you guys can see, continue to go up. Really no pattern here besides it retested support, resistance turned into support and bounced up, right? Keep going up, keep going up. Again, we touch right here. This was pretty short. Once we got past 25,000, I think people said, okay, we're going to 30 now. So there wasn't much resistance here. We only spent here 4 hours before we broke up to the next market structure. As you guys can see, I can pull this down a little bit. Go up. Look at all this volatility on the way up, guys. The market has been actually pretty kind to us. Above 30,000. Yeah, we had the 40,000 all the way to 30,000, but like all this, like 1 hour candles that span like $1,000, like this was not good altcoin trading. This was Bitcoin season. Even Ethereum was struggling during this time. This was literally just hold Bitcoin. And there's going to be times like that. Like when we break the all-time high for Bitcoin, most altcoins probably won't do very good. Bitcoin's going to be up like 11, 12% in one day. So that's when, and I'll tell you guys like, hey, I think Bitcoin's about to make a big move. I'm going to move most of my stuff in either Tether, or I'm going to know that I'm probably going to take some losses. So either you hold on your alts knowing that you're going to go underwater, or you can sell them in anticipation, just buy Bitcoin and then wait for Bitcoin to kind of chill out. Like you hit it right here, it comes back here. Like you could buy back in your altcoins here. Actually, you wouldn't want to buy into anything until it hits support down, remember? So if you look, we got a bull flag right here. So this big rise up, right? I'll go to the 4 hours, you can see it a little bit more clearly. Perfect. You see this straight up. We got a bull flag here. It did break up and we had the volume, right? But then we got ran into 25,000. Oh wait, actually, sorry. We're looking at the previous one. Okay. Boom, flagpole. Now this one, you could see it a couple different ways, maybe just two, but I see like a, it's still a flag, but it's like a falling wedge almost. I kind of see that, but I think, and guys, just keep drawing stuff. Sometimes you think you see something and it's wrong. Just keep drawing it until it makes more sense. Until you start seeing it, you're like, oh, you know what? That looks better. Yeah, there's a lot of wicks down there, so I can move it right here, right? But that looks better, right? You see the wicks confirming, boom, you see the breakout. Volume wasn't even that big. And this happened at midnight, so Europe was waking up, right? Move up. No. Sorry, this was noon. So America was just midday. Usually not a lot of volume, so I'm surprised it went up like this, but as you guys can see, it was pretty average. But as you guys can see, basically what is this saying? So we already got past 26,000 and then we got up here, came back down here to buy. Most of the time we see major resistance at even numbers. So 20,000, 30,000, 40,000, 50,000, 60,000, 100,000, right? It might go up a little bit, but for the most part, 10,000. I don't know if you guys remember 10,000. It took forever to get over 10,000. The bear market was brutal. It made a lot of people quit. I can remember telling Les maybe 5 times, I'm like, dude, I'm done trading. I'm done losing money. Why do I keep trading? So we come up again, another example of confirmed market structure, at least resistance for now. This was the concrete wall. They got some dynamite together. They burst it through, came back and retested, boom. So this was 30,000 basically, because once it passed here, look at this. We broke through that psychological barrier. But again, this was brutal. You had to be holding Bitcoin, because if not, like, you're just not surviving these moves. And a lot of people don't get fooled in. Like, yes, take profits, but we're in a bull market like this. Like, say you buy right here and it comes back down, you get stop loss hit, you buy right here again. If you're smart, you know, you come back up, boom, breaks it. A lot of people are going to like be selling right here. Like, oh, I got rejected, I want to keep my profits. You know, you buy right here and they'll sell right here, which that's 6%. Yeah, that's okay. But then it only goes down 4. So if you would have just held, you would have been in. But then it goes down 4 because, you know, you're telling yourself, oh, you sold up here at the top. It's got to touch here or it's going to come back down. That's what you're hoping. But you basically lying to yourself and not seeing the bigger pattern, or at least acknowledging that there might be something else at play. You probably missed this and you had to buy here. So yeah, you maybe buy here and sold for 6%. But the thing is you should have bought right here. You would have, if you would have saved 4%. So you would have gotten back in, you would have made 2% because you bought back in right here. And then you were able to break through. So you don't want to sell in these moves up. like when Bitcoin's just kind of going ape shit crazy like this, don't sell here. Like, don't do these little scalps, because look at everything else you're gonna miss here. And the majority of us, if not all of us, can't just stare at a chart all day. You can't. Like, so you got to let these ride. Yeah, set your stop losses. And if you get stopped out here and you see price move up and you miss it, I'm sorry, that sucks. But just get back in. You know, find some support. Find a place to get back in. You don't want to buy up here. You know, you can. You know, a lot of people buy right here. It went up. Probably didn't set their stop losses. Saw it go down. Oh, it'll come back up. You know, it went down a little bit, right? It went down. Oh, it'll come back up. Bearish retest, got rejected. Why are you buying the top? You should have sold if it hit back below this. If you're buying right below resistance, your stop loss is gonna be right below resistance too. Or you could put it a little bit lower, depending on what your risk tolerance is. What's like 2%? Yeah. If you're not willing to risk 2%, there's three things. You shouldn't be trading. Third, you didn't buy in the right spot, so your risk to reward wasn't high enough. And third, I mean, you're scared. And if you're scared and you're playing with your emotion in this market, especially in a bull market like this, you're gonna get left behind. Like, it is what it is. You're the weak hands. You're gonna get shaked out. They're shaking out all these downward moves, all this volatility. They want to see who the real Bitcoin OGs are. They want to see who's ride and die. You know, just like people in your life. All this is the hard times, right? So whoever sticks with Bitcoin through this deserves to see it make a new all-time high, which it will. This bull flag literally could break us past all-time highs tonight, guys. You could literally see this could be your first couple days trading and you're about to see an all-time high being put in on Bitcoin. Boom. Look at that right here, 43,000. And the chances of us bouncing off of 43,000 and then coming back down and testing this right here, pretty high. So we're going to see some volatility tonight, I think. We'll see how this goes. We need some volume, obviously, but I'm going to call it here on the video. We're going to hit probably like right here. BTC all-time high made, well, not tonight, but it'd be made early Friday morning, probably about let's say 5 a.m. Let's do 6 a.m. I think that's what's going to happen. And it might break through. But remember, market structure right here. How do I know that? Look at all these touches right here. We were only briefly here for about a day. Yeah, about a day. And then, as you guys can see, we just didn't have the power. Look at the volume. That's probably the easiest thing to be able to tell if a trend's got juice or not to keep going. Look at the volume. It was below average. That yellow line here, you see this yellow line curving along the volume. Remember, guys, that's average. That's to give you a reference point. So we came back down here. A lot of people sold, but an important thing was happening. Why? This formed the bottom support. So you don't really know where things are going to go. I mean, you could have saw right here, you know, this, like, say we're coming up, right? And then you sell up here because you see the low volume and you're like, okay, I'll enter if it breaks in. That's valid. If you guys see this and you see kind of chopping around here and volume is starting to drop and you're like, I bought down here and I you know, claim your profits, do that. That's good. You know, especially since we hit so high and it's around another psychological barrier for about 40,000, 41,000. You could expect, especially since we hadn't had a big pullback, that it was coming. So if you were, smart, conservative, sold up here, came down here, how do you know that it's going to buy? How do these people put their buy orders here and know it's going to come there? The reason being is because they look over, right, from the past and they find previous market structure. So there's a little gap right here. There's something called a gap right here. I don't know if you guys see it. There's really no price action that is happening in here. It came and filled it here. And I think the first class I put about gaps almost always get filled. I don't know if you guys have heard of CME gaps, futures gaps, but a lot of times that'll happen like over the weekend, where if you form, say, because futures don't go over the weekend, I'm almost positive, or after hours, something like that. I'm not 100% sure. I'll look that up before I confirm that on video, so you guys can make fun of me and say, he thought futures close on the weekend. So gaps almost always get filled. As you guys can see, there's really nothing coming in here, right? And the reason being is basically what this is the demand zone. So there's strong demand in this area right here, because you see price doesn't really spend much time down here. And that's what's funny is you saw this, and if you had some more higher tech indicators, it would show you how much volume concentration is in this area. I can almost bet that out of this entire picture right here, all this right here, like 20-30% of the volume was in this little corridor, right? This little hallway. So what's funny is you see this and you see these long wicks, right? And it comes back down. Remember what I said with these double bottoms, you're going to hit this first one and everybody rushes to buy right here. I usually do too, because you're afraid it's going to take off. Almost always, even here, people got faked out, right? But almost always it will come back down and test the same levels. So if you miss this and you see it going up and you're just waiting, once you get past here, I mean, you're getting far away from support. You don't really want to be past. Well, that's already a percent. I would say no more than 2%, because that eventually, and look, volume is low. Guys, I'm telling you, volume is like literally king of all indicators. It's simple and to the point. Like it really just, it could be wrong, but most of the time, 9 out of 10 times, if you look at volume to confirm your case for whatever you think is going to happen, you'll be right. If you play with it and not against it. So it came back down here and touched. I don't know if you guys follow on Twitter, like what groups you guys are in or your friend groups. Like most of my friends trade crypto now. So we're always talking about Bitcoin. Before I was the only one with the exception of Les. So nobody wanted to talk about this shit with me, but me and Les would talk about it all the time. I remember saying like, it's not going to go further. Like we're already here. Like we saw how much demand there was and it shot up, double bottom, right? So test this. This is all demand zone. There's a lot of liquidity, a lot of whales who are looking to buy here, right? And you're buying along support. The wicks didn't even get really close to the bottom of this falling wedge. So I don't know if you guys remember this, but this is when Elon put Bitcoin in his fucking bio, and it pumped. Right? It pumped and came back down. We weren't ready. We just weren't ready. This was just hype. This was almost manufactured emotion, right? There's an influence. You see this. Oh my God, King Elon just, posted a fucking thing and boom, they're not ready. So they came back down, broke out. So this obviously 1 pattern, 2 pattern, 3 pattern inside this bigger pattern, right? And a lot of people, including myself, we're trying to look at this pattern here as an inverse head and shoulders. And I don't know if you guys can see, but this shoulder is a lot lower than this one. So let's see it, the bottom.
Hey, Mike, I just joined it. What are we talking about tonight? Just want to say something for the protocol.
Oh my gosh. I had some peace, I had some peace and quiet, and then I had some peace and quiet, and then all of a sudden. All right, guys. Hey, I'm in the middle of something. If you guys join late, you can't just come in here yelling. All right.
Okay, I'm muting. Go ahead.
I'm glad you guys are here. Okay.
Oh yeah.
So we're
he's
learning.
teaching patterns.
Yeah, we're learning patterns, just how to identify patterns and reversals. So look from right here, the bottom of the shoulder, right? What did I say? More than 10% to this bottom. That's not a inverse head and shoulders. I even told myself, I was like, I know it's breaking the rules. I know it's breaking your own rules, but it'll go up. I bet a lot of people did too. Then boom, it's not. What it really came out to play out was a double top. I know I'm talking a lot about bearish bullish patterns, but there's bearish ones too. Little double top. You see it kind of played out. And what it is, it looks like an M, right? You see the M. And what it is okay. And again, same thing for the double bottom, within 5 or 10% of each other. So the bottoms have to be within 5 to 10% of each other or less, preferably less than 5%. But you could do up to 10, but you're pushing it. Here, what's the difference? Oops. So what's the difference between this top and this top? 3%. So you're like,
that's the call option with a strike price of $800 and the stock price is at $1,000. Since I personally could use that option to make a $200 gain on the shares if I exercise the option, but I don't want the option.
when the majority of people, whether it's 51%, 60%, it's the majority of people think and believe that Bitcoin is worth more than 42,000. Right here, not enough people believed that Bitcoin was worth 42,000. So what happened? People started to sell. And where did it sell to? It sold to a previous historical support line. This is where people at the time believed Bitcoin was worth. People saw Bitcoin up here and said, nah, I'm good. I'm not gonna buy that. It's too expensive for me. This is what people thought Bitcoin was worth down here. At least the people who move the market, right? You come up here, get rejected again. So those are some of the smaller patterns. I know you guys see these green lines, right? So let me clear everything. If you were just to see this, what would you think? A lot of people would say, oh, it's slowed down. It's gonna fall. You know, it's lost its juice just because they're not seeing a straight up like this. This is healthy. This is healthy.
I think long term is the winner.
Well, yeah, you know, again, but everything that comes up has got to have a correction. Like I said, when price rises too fast, you guys are the price action is leaving behind people who want to get in, right? But they just don't think Bitcoin is worth $42,000. So it's going to go down to a price where people believe and will accept that worth. So what I see right away, a lot of people say, oh, we're going down. I'm like, oh no, this is a blessing. This is called a bull flag. And you wouldn't be able to really draw these lines until you see a little bit of this action. So don't worry. It's not like I see this up here and then I automatically draw the line. I'm not an oracle, guys. Like I don't see the future. I'm getting a lot better every day.
Are you using TradingView right now? I can see it. This is TradingView?
Yeah, it's TradingView.
Got you.
And you see this bull flag, right? So you got to wait for the top and the bottom to be put in. Once you see this right here, you can start to kind of draw. And let's talk about adjusting patterns, because there's going to be times where you draw wrong patterns and price action starts to play, and then it comes back down. You're like, I probably didn't draw the right pattern.
Okay.
Let's say you drew right here, right? Let's say you drew right here. And you drew like right here.
You think it's gonna drop right now to this level, to the same pattern that you just?
One second. Let me finish this and then I'll get to right here, because this leads into this right here. So it's important that you guys know what I'm saying here before I get to right here. So you see this flag, right? and you see the price coming up. It's on the 4-hour too, so you really shouldn't have these candles coming up like this. And then you look at it as well, and it's low volume. Low volume meaning average or below, or just above average or below. That's low volume to me. So you have to readjust your patterns, because this is not true breakouts, right? Breakouts, remember, have increased volume. So a breakout is literally just a change in the normal. Think of Bitcoin as kind of just lulling to sleep. You know, it's getting ready for bed, right? It's very calm. So basically what you have to see is you're looking for boom, a change. You're looking for a wake up, right?
But the wake up is coming soon. Did you see the meeting with MicroStrategy?
Oh, no.
Oh,
I
you should see
Liran,
this.
he's
It's
talking
actually
about,
meeting.
Liran, this is technical analysis. This is not like.
Yeah. Let's do that. And then afterwards, please, whatever you guys are hearing, we'll have time to talk after. So I just want to get through this because I'm recording it, and there's people who, you know, are watching this for study stuff. So anyways, you have to adjust the pattern. So if you have your thing like this, and this is all low volume, these are not breakouts. So you know that they're within the pattern. So adjust your lines. Adjust your lines. This was a breakout. You can leave it like this. See, you wouldn't put it like this because this had the volume. Yeah, it came back down, but nonetheless, it had the volume. So don't disrespect the volume. You must respect the volume. So, and then down here. So say you had your line on the bottom here like this. I guess, you know, you could look at that and you say, oh, well, it was a breakdown and it came back up. But look at this. Volume is, it was good. So you could say that. But all this right here, like this is low volume, right? So this shouldn't be outside the pattern because it's low volume. And low volume basically means is that there's a continuation in the pattern. So it's going to continue to play in the pattern until there's a majority of people who say, no, this pattern is done. We're not going down anymore. We're going up. But you're looking for these breakouts. So just a quick note on adjusting the patterns, because you're going to have to run into that sooner or later. You could even draw like that, right? So you're not cutting through any candles. So we see this right here, right? This bull flag is literally giving people chances to buy in before the big rev, which, Liran, like you were saying, I believe maybe tonight we could see a new all-time high. So
Yeah, that's why, because that's what happened in the meeting with MicroStrategy. They're gonna establish all the coins with many big companies. They're gonna buy Bitcoin.
I
Yep.
disagree. I think if we'll see all-time high, it's gonna be the weekend, because people are still buying, like, you know, stocks right now. In Friday, people are gonna get bored. Boom, let's pour it into crypto. You know.
No, Eddie, you didn't see what happened in the big meeting.
Well,
with
I have a,
Binance.
Hey, continue the class.
question.
all right,
first.
guys. So so we broke through right here, right? We came back down. We broke through. The reason why you see this as a confirmed breakout, right? Because it was this green candle, right? And you see there's heightened volume. It's not much. It's not compared to the Elon tweet, but it was heightened. So it came back down. You see the selling. This was perfect entry. This is the safest entry you could ever get in a chart, is all this right here. All that right there is confirming that, hey, we broke. So when I say pattern, what I mean is it's just the flow. This is the flow. Until an earthquake comes and shakes something up and creates a tsunami, right? It's the waves are going to be calm, right? I know it doesn't look calm, but it is calm because it's staying within a pattern. So until we get enough energy to push through, then that's a confirmed breakout. So you come back down, zoom in, right? It touches right here. This is your buy-in. So it comes back up. We see it. You don't sell yet. There's no point to sell. It's got some legs. So the reason why, I'll show you, Laurent, and I mean, this is why I think it's going to break up tonight. is this is a bull flag, right? The measured move, just rule of thumb. This is the move. Yeah, you could count all this, but no, actually, no, you can't count all this. This is its own move, right? So you're taking the swing low of this little move to the swing high. So general rule of thumb is you just take, it's not hard, guys. Like I'm telling you, it's not like calculus to figure out where this shit is going to go. So you just draw a flagpole, right? I know it's crooked, but as you guys can see, it's pretty much straight up. And then it starts to consolidate and it creates this little flag. So you're going to take this line that you drew, the flagpole, and usually these patterns break out about 75 to 85% of the way through. So like 0%, 10%, 20%, 30%, 40, 50, 60, 70, 80, 85, 90. Usually Bitcoin likes to take its time and it will actually like go all the way through, right? Or we might see it right here. What I'm thinking is we're going to see a breakout about this time, 4 p.m. And it's what's funny is look how close that is to about 80, 85% of this flag. So if this was a textbook breakout and break up, I mean, guys, I told you guys that it was going to break out. So right now people were asking, hey, I'm in Tether. What should
Michael,
I
do you see 100K this month?
No, not at all. So if you know, people are asking me a lot, hey, what should I buy? What should I get into? Can I buy? Is it a good time to buy? Yes, because I put all these charts on the group. So anything in here is to buy. You don't want to buy up here if you don't have to. You want to buy here. And I don't know if you guys saw, but literally on this candle at 6 o'clock, this candle was right here. It was right here, literally right here. Actually, let me show you the, let me show you the chat. Let me show you the chat. Look at this. What did I say? Will this bull flag break up or down? Perfect entry on support right now. This is where you buy. A lot of people, well, what if it comes down? Then just put a stop loss right here. Because if it breaks down, don't be afraid to put your stop loss. You know, you put it below this lowest wick right here. So put it right here, that's 3%. But then you would expect, because there's a magnet here, remember? These trend lines are concentrations of volume. So they act as heavy, dense objects. If you guys know anything about space, the heavier something is, the higher the gravitational pull is. That's why I keep talking about magnets. This is a magnet. So if it breaks here, that's showing you that this bullish pattern has been invalidated and price needs to come back down here, because apparently not enough people think Bitcoin is worth 36,000. I bet people think it'll be worth 34, 35,000. So you had a chance to buy right there. At this point, I wouldn't, you could buy, I mean, you're midway. I mean, you wouldn't be bad, you know, especially if you're expecting it to go up, but you want to buy here and you want to buy here. You won't buy the wicks. So let's just say right here, you want to buy these bottom parts. And then you set a stop loss. Look, and you ask how much loss? That's 1.5%, guys. Come on. Like the risk to reward, you would have already had this drawn. And I already had that drawn in the pattern here, right? I already had this drawn for you. So the risk to reward right here, if you bought at that level, which I showed right there, let me show you what that is, because this is all probability. So to the top of this is about 2, almost 3%, right? And then if you were to be stopped out, it's about 1.5%. So the odds of this trade that you're taking is 2 to 1. That's good. That's good odds. You know, that's good odds. Take it. Because if it falls, then you said, all right, I put myself on the winning side, or I put myself at the highest chance to win. So that's all that I care about. So if this breaks through, what is the measured move? 43,000, baby. 43,000. And you want to see something even cooler? Let me leave that here and let me draw the fib. Let me draw the fib retracement so you guys can see. We're going to draw from here to here. Because yeah, there's lower points, but usually a swing low is determined and shown by a drop. You're going to see a drop, and then you see a bounce of support, and then it never really comes back. That's called a swing low. So right here is the swing low. Obviously, this is the swing high up here. So let's draw that fib, and I can almost show you. We're looking for confluence right now. So this is what we're doing right now. You're asking, you know, why are you drawing this? You already got the bull flag. It's telling you where it's going to go. We're looking for confluence right now. So that's a smaller pattern. Don't even get concerned with that. What you guys should be focusing on is look at the bigger pattern that is playing out. So that's a little bull flag. Fuck the little bull flag. What about the big ass bull flag right here? Let's see where this thing's going to take us. And LeBron, this will answer your question. This is where I think Bitcoin is going this month. We broke out right here, right? So you always want to play this bull flag at the point of the breakout. The measured move is $60,000. Usually, give or take, you want to like, you know, you don't want to put at the very top, because usually for the majority of the time, these moves play out to about 75 to 85%. So if this is 100%, you would want to put your take profits right here. Like my take profit, I know is before the 618. That's about 58,000. I think I might even start taking profits like in this little area. So that's sell area for me. If it goes higher, cool. I won't buy back in unless it goes past here. If I've already sold all my stuff, which I wouldn't sell everything up here, I'd sell like 50% of your bag if you're just holding Bitcoin or Ethereum, whatever. But if it breaks past a certain point, you got to give yourself basically a revert line, you know? If it goes past here, you buy back in. Why? Because your idea of it getting rejected and coming back down is something like the 382, right? Or even maybe further. We could come up here. Guys, don't be surprised and don't start telling me that, oh, are we back in a bear market? Have we lost our steam? If we come up here, say we even hit 62,000, do not be surprised if we come back and touch 42,000. Don't be afraid if we fall almost $20,000. We're still bullish. Why? Because this is major market structure. This is the parking garage. This is the bottom. This is the concrete floor. Once we break through, it's going to find its way back here. Even if it's just a wick, even if it's just a long ass wick and it touches a couple times, there's going to get buys right here. People are going to get buys here again. So this confirms what I think is going to happen. So this is what I think is going to happen. We break through, this little pattern is going to have the momentum to carry us up here. And then I think we're going to start seeing this bigger pattern play out over the next month. It's February. So by the end of March, no, not by the end. I mean, by the end of February, I think we're going to see prices up here. This is where I'm taking profit. Why? Look, 618, this flagpole literally almost perfect. So it's telling you, hey, all right, I think I have a plan that works. So this is what I expect price to do. If you miss this breakout, or say you do not believe me, and you're like, no, I think it's going to break down. Okay. Well, just make sure you're not stubborn and you still, you know, are keeping your bearish scenario. If it breaks up and if it comes down and it bounces here, or we even get a wick and comes back down here and it starts to curve up, I swear to God, you better buy or I'm gonna smack you. This is literally a chance to buy before it gets to 60,000. If you didn't buy down here, like this is where you should be buying. And you're right on support, right? You're right on some good support right here. It's not the strongest, but it's good. So if you don't buy here and you want to wait, see it break up, don't buy the top of this candle, because I'm telling you, this candle, it's probably going to be a big green candle about 4 a.m. when the London daybreak happens, when the London financial markets open. So you're going to see it. It's going to come back down. Buy here if you haven't bought already, or if you want to buy more. This is your buy-in zone. Wait for the breakout and then come here, buy the support, the bounce, and it'll bounce back up. And then what we're probably going to see is once we do that, we're going to see price hit 50,000. We're going to get stuck at 50,000 for a little bit. As you guys can think, that's a big number. Just a couple months ago, we were talking about 20,000 and how a lot of people were like, yeah, 20,000 is the end. It was a fake breakout. We're going to go back into a bearish trend, blah, 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 blah. I can't tell you how many things I heard. And I didn't trust myself and I didn't trust my skills that much yet.
Michael, I have
Yeah,
one
go
word.
on.
COVID changed the game. That's it.
Yeah, for sure. Yeah, it changed the game for a lot.
Yeah, the printing of money
COVID
with all the
wasn't the only
stimulus
thing
checks.
that changed the game. It's just, this is the cycle. It's a market cycle.
Yep.
It does it every single 3 years, no matter how you look at the graph. If you look, just like you explained yesterday, Michael, when you showed the graph and you told them the best buy points are in these points, that's how it is. It's just, that's how it works.
Yep. So there, and what he's talking about, guys, is more fundamental stuff, and it's important that you learn the macro stuff. And I talked to Daniel earlier, and he's going to be doing a class with me here soon, and I'm sure Les will help us as well, talking about macroeconomics, talking about the bigger picture. Like, all this charting stuff is cool, but guys, if you understood what Daniel was talking about, this cycle, right? And I'm going to show you exactly what we're talking about on a different chart. Let me get a fresh chart for you guys of Bitcoin. I'm going to show you the point that you should have bought and not let go. And I actually think there's somebody in our group. I don't think she's on the Zoom call right now, but I think she bought at this point and she's been holding Bitcoin ever since, and she's up like 4 or 5x. Impressive as hell. So I'm going to show you the exact point that everybody knew we were going to go to 100,000. You know, this was the start of the super cycle. What we've seen so far, guys, is nothing. This is I might, you know what? Let me find an older chart that shows all the way back. Is it Bitrex's chart?
I think Coinbase has it.
Is it Coinbase that goes all the way back to like at least 2015, 2016?
They go to 2013, I believe.
Okay, cool.
Yeah, it does.
Right. You guys see this? So guys,
I'm the genius of Coinbase.
if you were in Bitcoin at the time, these little blimps on the screen were huge fucking drops. This was catastrophic at the time, you know, because you were going, look, let me show you how big this is. And what's funny, you see this right here, you see all this right here, where we're at in the chart is going to look like this in a couple years. Right here is going to look like this in maybe 5 years. As we start growing, guys, all these little dips that you were worrying about and crying about, me included, everybody in this chat is worried at some time. That is going to be, we're going to look back and be like, why were we crying? Look, when price gets up here sometime this year, what I'm thinking, you see this big swing up, and then we're going to see these big swings down and swing up and swing down, and then maybe back up. I don't know what's going to happen. But look at all this. Went from 20,000. Remember, everybody's saying, oh, Bitcoin's dead and it's a meme and it's a pump and dump, whatever. And it went down here, and then eventually the coronavirus crash happened, right? Or no, this is further up. But here, got the $3,000. Everybody's saying, oh my God, it's done, it's over. How many people do you think wish that they held or bought right here? They would have 10x their money holding the largest market cap coin. So
I want to say something.
Yeah, go ahead.
I want to, everyone knows this feeling, but have you ever been in a feeling where a good friend of yours or a girlfriend of yours has come and told you, let's do this and this and this, and you're like, no, I can't, this. Our reaction automatically to every single new thing that is out of our concept in our brain is automatically, we are taught to automatically to push it away from us. And then what happens is after we do it, we realize that this is, wow, this is amazing. And then it's like even better. And then it becomes a habit. So this is what this is what a market cycle is in general. So this is what Bitcoin went through up until a couple of years ago. People were disregarding it because they just can't understand the fact that this is staying. And you can see today they're flipping. Why? They probably bought it at 5,000 or 3,000 when it went down, and now they made a lot of money on it. And they're like, yeah, of course, we love it, we want it. That's how it works. That's how every single thing works in life.
As you
Anyway.
guys can see, we're getting some volume into the market right now. It's Bitcoin is testing this upper line. So just watch this, but let me show you something crazy. So this is the top, right? I don't know if you guys remember, you might've not been in Bitcoin. You might've not known what cryptocurrency is, but I guarantee you remember everybody talking about it at this point. And then obviously down here, this is when Chase, all these major banks are saying, oh, it's used for drug dealers and prostitution and child trafficking, and it's just good for pizza. They were buying all this shit down here, and they were lying to y'all. They were lying to us, right? So this is a macro pattern. There's some people who only trade these macro patterns. Only. They don't care about this little shit. To them, to us, you know, who I'm teaching you guys how to chart the little stuff on days and weeklies and stuff. They don't care about this. This is little to them, but this is what they're trading. So as you guys can see, you don't really see this forming until you get the second touch right here. You don't really know what's going to happen until you, okay, swing up. People got optimistic, like, oh my God, that we're going to go back and all these people are going to get their money back. Boom, rejected. Come back up. Boom, rejected. So this was a long, painful bear cycle. For anybody trying to trade, a lot of people lost their ass here. A lot of people made money and then they got greedy, or they just didn't sell, and then boom, they lost it. A lot of people lost just trying to trade against this. When it's in a bear market, it's pretty hard. There's not a lot of liquidity. Volume is down, like the market cap went down. I remember market cap being at like 300 billion, 400 billion total. Now we're over 1 trillion in a couple of months. So you just see, and I zoomed in while Daniel was talking and showing you guys, look at this. 2 touches, and this is the daily chart. So 2 touches, 1, 2, 3, 4, 5. You could even, you know, 6, 6, 7, 8. So this is confirming, and then right here, right down. So this is the point you would want to buy. This would be a buy signal right here. Yeah, it came back down, so you probably get stopped out. But again, they were shaking out the weak hands. They already knew what happened. When this was the point that really changed history for at least the time being. This little candle right here, because it showed we had a daily close above this all-time resistance. We literally hadn't done that for 3 years. And this was the first time. I remember that. I bought like up here, and then it came back down. I think I sold, and then it came right back up, right? So you can tell that this is structural support because it breaks down, you know, comes up, it touches right here, ends right here.
Can I ask a question, Michael?
Yeah, go ahead.
Can you go back to March 2020? You see the big red candle?
Yes. Can I finish this real quick and then I'll go back to that?
Of course, man. Go ahead.
Okay. So touch right here, right? It breaks through. As you guys can see, there's a battle going on. There's a battle because the bears know what's coming. They know the bulls have the advantage right now. They're like, fuck, you know, people who wanted Bitcoin to go back to 3,000 were like, oh shit, things are going to pop off. I'm telling you guys, May 7th, this is when we knew, or at least a lot of people started talking about the YouTubers, the people who were bullish said, we're going to 20. First they said 20, then they said 50, you know, some people said 40, 30, whatever, but they said the bear market's over. But then look, the next couple of days, this is shaking out the weak hands. This is shaking out the weak hands. The bears are like, okay, you might have won the war, but we're going to win the next couple of battles. As you guys can see, there's a battle for this front line right here. Think of it as a war. And all this is confirming, that it's valid. And then boom, May 28th is when we broke above, and we have not been below this green line since. This is when the bull market started. This is when the supermarket cycle started. It started here. We got fucked around with right here, and it came back up. Look at this. Look at all the volatility, guys. I don't know if you remember after we broke this, there was so much volatility, up 8%, down 8%, right? And then Bitcoin wouldn't really do anything. And then since it was just so spotty, altcoins weren't really doing anything either. So this was a frustrating time in the market up until right here. And then you could even see a smaller pattern here. You can draw trend lines all you guys want. There's little smaller trend lines in here, right? So you break out, and now you see that this is your support. You could even see this as a bull flag, right? Because this is what Ami is talking about. You see this dip? We got up here to 10,000. This was the end of February, right? And this is usually when people warn about dips. We usually see downsides in March, right? So you see this down. Obviously, this was kind of unexpected. We didn't really think this would ever happen. A lot of us thought COVID was a joke, you know, and look, it's brought the world to its heels, but obviously it's helped Bitcoin. So you come back down, right? A lot of people lost a lot of money, right? Some people lost everything they had in this stock market and in Bitcoin. This is when people again were saying, "Oh, Bitcoin's dead. It's shit. It's worthless," right? All the smart people knew that this was just the beginning of the end for the dollar and the beginning or the end of the beginning cycle for Bitcoin. Because like once we break through, see, and then you broke through, and then we never saw this level again. We came back down. Look, and this is an important thing of what I was saying. When we hit 50,000, 60,000, do not be afraid if we drop down to 40,000 and then bounce back up. A lot of people are going to sell their bags right here, but this is where the smart money's buying. Why? Because there's major structural support from a previous high right there. As you guys can see, this is a pivot point. Think of it, bullish, anything bearish below this, bearish, 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 bullish. People think bearish, but then they sell too early. Even it comes back down to give you another example of buy, boom. So every time you break an all-time high, you already know where that price action is going to come down to eventually. Very rarely does something break through a high, a local high, an all-time high, whatever, and not come back down to touch it again, right? So what I think Daniel's talking about too, and I want to show you guys, let's go back to the early days of Bitcoin. So around the halvings, right? So does anybody have the dates for the approximate of the halvings so I can kind of mark it on here?
I believe it was
2016, right? Right here?
Yeah, May 20, the first halving, the previous halving, 2016, I think it was May.
Yeah, May, like right here, right?
Yeah.
May.
The
Right.
same date, you know what? The same date it broke out this year, last year. The same
Okay.
day, just
Okay.
different days.
So you
but
guys
it
can
was similar,
see.
similar time.
So you guys can see, look at this, a perfect example of an all-time high being broken. And look how much they went up. So it was only a couple $100. Oh my God, I might sell my mom to buy Bitcoin if it was back at this price. So boom, 65% in literally what? A week, couple weeks? Crazy. And then imagine going up and then giving it all back. A lot of people, well, not all back, because you know, I don't have time to explain why this is 65% and they look the same on the chart, but this is only 35. But anyways, it came back down, touched it, and never came back. But everybody thought at this time, and look, this is an example. Let me show you another trend. This is called an ascending triangle. This happens in bull markets or bullish markets. This is a very bullish trend. As you guys can see, it's respecting this trend line, right? Broke through. This, everybody thought this was probably the pump, right? But the smart people, the people who looked to the past to give them a hint of what the history was, or people who looked to the past and used history to determine what future was going to be, they were right. They knew this was going to come. They knew this was going to come up. Everybody thought it was the top. Another example right here of a bear flag, opposite of a bull flag, right? You can kind of see this little triangle. It broke down. Remember, these bear flags have a statistical chance or odds, 2-to-1 odds of breaking down. All right. So people knew that this was going to happen. Whales knew this was going to happen. They were salivating at the chance to buy this because look, it never looked back. It just continued to go up. So this is where we're at right now. This is where I think we're at right now, up to this 40K, right? So imagine this is 10, this is 40, right? This is where we're at right now. And then we've been chopping around, and then imagine our price like right here. So like right now, if we were to transplant, like we're right here. So a lot of people are saying, oh, we're going to go back down. The only reason they're saying that is because they want to buy cheaper. So don't let your emotions and your greed control and influence and lie to you. Let the chart tell you what the hell is going to happen. So everybody thought, I bet, was the top, right? So they sold, it came back to here, they panicked, they sold, they started come up, they said, oh, okay, maybe this thing has a chance. I bet a lot of them didn't buy, a lot of them didn't buy, a lot of them didn't buy until boom, they saw this. And look, again, what's important about identifying market structure is because if you didn't have that line, and you were just following on Robinhood or Coinbase and you weren't using these charts, you know, you're just, you know, looking at the little squiggly lines, you would have really not thought nothing of this. You wouldn't have bought until you started this. But the smart people bought here. Why? Again, what pattern is this forming? Look at the bigger pattern through these market structures. This is another ascending triangle. Look at that. It's a little ugly, but you can see it's respecting a trend line. It's just chugging up, chugging up, chugging up, chugging up, chugging up. Broke through. Again, what happens when you break all-time highs? You go up, you have these big pop-offs, and it comes down. But again, it always goes back up. So this is where I think we're at, right here. I don't think we're going to come down here and do this. I think we're at right here. This is just like this 40K, guys. This 40K that we're here and we're struggling with, and you know, people are saying, oh, 37,000 is the top, and you know, we're not going here before we go down to 20. I've heard some people say, oh, we got to fill the gap at 12,000. This whole move up, if you guys love this, you guys cannot, like, you're not going to believe when you see Bitcoin at 300,000 this market cycle or just below it. The stock to flow model chart that 100 trillion USD puts together, which is a great Twitter channel for you guys to follow. I'll type it down. You're welcome, 100 trillion USD. Look at the S2F. It's called the S2F chart. And basically what it does is it compares commodities and their market cycles and their growth and their maturity cycles. And Bitcoin has literally been following lockstep with gold and some other commodities in their maturity of their market cap. It's called the S2F, yeah, stock to flow chart, something like that. You guys will see it. I think it's in his description, his little bio. So this is nothing. This is just the warm up. This is the halftime, the pregame show. The NBA players haven't even gotten on the floor yet. So in the super cycle, say we do go to what it suggests. And let me clear all this. And it's at 288,000. That's what the top of his chart says. His estimate is 288,000. You guys see what I mean? Look, this is the March 11th crash. If we go up to 288,000, you see that little thing right here? This little blimp, this little scratch on the screen, that was apparently the end of Bitcoin. That was the end of Bitcoin, right? This is when everybody thought it was all over. They're like, all right, guys, pack up your bags. Magic internet money is not real. I guess we're going to have to keep using this shitty ass dollar. No, this is just the start. So when you zoom out, you start to see like, oh shit. Look, this is the funny thing. People are saying, oh, $40,000 Bitcoin is expensive. Imagine the people who bought at the top. Oh my God, I'm never going to get my money back. It's going to be 3 years until I get my money back. Hell no, just hold. Why? You literally could have held the top of Bitcoin and made 600% in the next, I don't know what his S2F model is. I think it's 3 or 5 years. So in 5 years, you could have made 100% on your money, at least, just holding the most expensive and the biggest cryptocurrency asset. Imagine if you held Ethereum. What do you think Ethereum would be at if Bitcoin went to 300,000? Ethereum is going to go to probably 10,000, 12,000, maybe even more, even with Bitcoin at like 100,000. So imagine what Ethereum would be at this level. And we're talking about thousands, if not tens of thousands of percents of gains on Ethereum. And again, keep in mind, Ethereum is the second largest market cap. So imagine if you're like in something like Aave or RSR or BCH or Litecoin, something with a smaller market cap. Guys, we're talking like tens of thousands of percent. You could literally forget your fucking password to your exchange or your wallet and then find it. FET. Oh, that's a good trade. That was a good trade. That's already 4x since I got in. I got out a little early, but if I would have held it for about a month, FET coin, FET, just 4x itself right now.
Hey, Rich, I got a question.
Yeah, go ahead.
So basically, if it respects the fractals, basically, or like the previous market structure, so even if you get in a shitty position, basically,
It's gonna go
especially in
up.
this bull market, you're pretty much safe. You basically only lose if you sell.
Yes.
Right? Until you hit another support or resistance, and then you could kind of
Exactly. It's funny you say that. That's a really good point. You heard what he said, right? You only lose if you sell. That's the game. That's the game. Everybody's holding their bags. The smart people are holding their bags because they zoomed out and they see where this train is going. And this is short term. Guys, they're calling for $1 million Bitcoin. Because if you, it's all about the maturity of a market cap and of an asset. It's going to go through ups and downs, but what is the long-term goal? I mean, I don't know if you guys are seeing, but these like Kathy Woods and these hedge fund managers are saying, guys, we have to get Bitcoin up to 400,000 between this level for it to stabilize. Until we get it up here, it's risky and nobody's going to get into it. For us, we're like, are you guys serious? You guys going to buy this shit up until here, you know? So I guess that's what it comes down to is don't worry too much, zoom out, you know where we're going. You could have literally bought the very fucking top bag and you're going to be up 600% in a couple of years if you literally sold that bag. So, and remember guys, in a bull market, today's top is yesterday's bottom, right? So today's top is yesterday's bottom. So don't feel bad. Yeah, you did not probably listen to my advice. That's why you bought up here, or you bought into your emotions. You know, I bought some Bitcoin, I think at like 38,000. I think I bought it like right here and it went up. And then, you know, I felt stupid when it was down here, but nonetheless, look, I'm almost broke even on it. And soon it'll be below this major market structure. So I'm never selling the Bitcoin I bought right here, because I bought Bitcoin here. I bought a little bit right here. I bought a little bit right here. I bought a lot of it at like 16,000. I think I even have some from as early as 12,000. I'm never selling it because it's never coming back down here. You know, and if it does, okay, I sell it and then I just buy it back for cheaper. You guys want to see what the Bitcoin chart is doing as we speak right now? So let's see, things are starting to pop off. Let's see if we have enough volume to break through. As you guys can see, it kind of got into a lull. Things are picking up. We're at least getting back to the average. For at least for right now, I don't think we have what it takes to break through. Again, we're just going to have to wait for the influx of volume that comes in. As you guys can see, it's struggling right now. That wick is saying, okay, some people bought, but there's more supply than there is demand. So that's what this green candle is, demand. If it comes down, there's more supply. So that's some stuff. I know I kind of went into a macro view too, but I gave you guys some patterns. Let me end the recording and then please, any comments or anything.